Hi, this is Randy Finney with Right Side of the Chart, and this is video number 2 for Friday, November 8th, 2024. It's 12:48 p.m. Eastern Time. I'm doing the video. Probably be the last one for the day. I'll probably cut out early. Still kind of keeping things light this week, and really want to see what goes on next week once the dust settles. In fact, I made a reply here. I was going to cover an update on China. Somebody asked, as I was recently covering the trade ideas, hey, what about the China trade? So great question. I meant to include that, and I'll give you that update here in a second. Mike asked this question here about, going home short or keeping things light right now. What's going on there? And yeah, and I am, like I said, it's still, last week was the big Mag 7, most of those reporting big tech stocks. And then this week, of course, you had the huge presidential election and the big FOMC meeting. So we're right, still not a time to engage some market aggressive on either side. In a nutshell, I said, the price action for this week so far has been clearly bullish, with the rally post after the election results and then the Fed. But that has to be taken with a grain of salt, as knee-jerk reactions to big fundamental events such as this are often fleeting and reversed. Often, but not always. So let's just, see there's no rush. Let's see what happens next week. As far as the market, I already covered it pretty extensively, but this is NQ. These are the futures. This is that preferred market top, 21,000, which we hit almost to the button within, again, basis points there. Went down, hit the final target. So we're right back there, right back to where we started on the futures. The spot NASDAQ 100's just an ever so slight hair above. Here, let me show that. And then I'm going to cover just the update on China and then the ag input stocks. I meant to cover those in the last video and forgot, so I'm going to cover that. But NDX is the NASDAQ 100 index. I have different boards, but this is pretty much what it looks like. You had this uptrend line off the January 2023 lows. That's when it really took off. Had a couple punches down below it, but those also hit the 200-day moving averages, which, as I said, are the big levels that until myself or anybody can get really bearish on the longer term and increase the odds those long-term targets are going to be hit, you have to take out the 200s. When you're above the 200s, you're in an uptrend. And so we hit it again there, we hit it again there, and we remain above it. However, the technical posture is very similar. We had a divergent high there. We had that first drop, and quite often you go on, if you make a marginal new high and it's still a divergent high, doesn't change the technical posture. So divergence is not a sell signal, and that's one reason to, right now, can't make a hard case to, short or anything. Let's see what happens next week. Let's see if this, again, on the spot, NDX, it's a marginal new, ever so slightly new high, not very convincing. So we'll see if it follows through next week. And if it does, it has the potential to really change things, especially if we can start walking away from this level. So that's it. We'll pick it up next week, see how it goes. Just how my brain ticks. Again, we don't have sell signals now. A rally into resistance, but this isn't. It is resistance. It is a single reaction point on the and those traders look at that on the NASDAQ 100, those previous highs. But just to follow up on the questions that got put to me since the last update. Hey Randy, don't you think a parabolic move Okay, sorry I had an interruption there. I had to pause the video for a few minutes. Where was I? Talking about Tesla. So yeah, somebody said, do you think a parabolic move coming in Tesla to all-time highs? It looks strong in the daily, weekly charts, and there's no sign of reversal yet. Great question. Great observation. Remember, my brain ticks a little different than most. So my reply here, fundamentally, and this is just a fundamental rambling, doesn't really affect, a trade. But the cross currents on Tesla is interesting to me. Musk, we all know, is all chummy with Trump. He was on the campaign trail, jumping up and down on stage, and helped Trump out. So we know they're tight, and he might even have a place in his cabinet. But Trump, we all know, is clearly, vehemently anti-EV. So that's interesting. That whole thing. So Tesla shooting to the moon because of that relationship, obviously. But Trump clearly, and even the media cited how Ford and GM rallied on the Trump win because they've kind of shifted away a little bit from EV cars recently, and so more gas combustion engine cars still being made by those two. So it's one of those things. Well, which is it? Is the Trump win bearish for EV cars or not? So anyways, it'll be interesting. I have no clue how that's going to pan out. But here now, technically, this is what I do, technical analysis. So technically, Tesla has rallied into pretty significant long-term resistance while overbought with big divergences between the price and momentum indicators. The last time Tesla was in a similar technical posture, i.e. a strong rally into resistance with negative divergence, was right when the stock, supposed to be stock, peaked in mid-July 2023, wiping out about half of the company's market cap in the drop that followed. As with back then, nearly everybody was bullish because of strength of the current trend. Well, not everybody. And then so I give a little link here, and you could check it out. And this is it. I'm just hitting the video now. So this was right before they reported. Let me mute that real quick. And it's playing live, and they were reporting, but I called this one down. It was the same technical posture we had. This is the video playing right now. That we had a significant, downtrend line resistance, negative divergence, and from there, and that was then, and you can watch the video goes on to draw the arrows going down. Let me get back to where we are now. And again, it either works out or it doesn't. So like I went on to say in that reply, it's simply a mechanical trade. I am not a purely mechanical trader. Sometimes I will second guess trades. Sometimes I will go off instinct, but for the most part it is. And it's simply that. Nobody wants to short today because of the rally in the last few days since the election, but that's good resistance. This was a very good level. We were topping here in a range, broke down, tried to recover that range, and when we couldn't hold it, it was lights out. We had a big drop. Then we set up another trading range with multiple failed attempts to get through there. And these are the most recent reactions at that level. This is the first time getting to that level. So there's where I come up with significant resistance. And then this is, you've seen my charts. You haven't seen negative divergence on the daily time frame until, and that was right there in the video. And again, you measure it out. They report. I was warning of that they were reporting, but I also said typically stocks will go in the direction of the earnings, not always. And there's a drop, 52%. You got, if you went long because everybody wanted to go long, because look at the uptrend. This is human psychology. People can't even think. They think you're crazy wanting to short a stock with such strength. And again, it may blast through there. We've seen that before. It's like any trade. And that's what this little guy is for. And that gives you if you decide to take it, a downside of about 6% and when I said most likely we'll add additional targets if that plays out, that's a 22% drop to T2. So you're talking much better than a 3, almost a 4-to-1 RR. Again, take it, don't take it. I honestly don't care. I don't share in your profits on the trades that you get make money on, and nor do I share in the losses. So that's up to you. And I just wanted to point out that that's what it looked like back then. Okay, now back to where I just started out was this one right here. No, that's back then. This one right here. I think we're on the most recent post below today's earlier video. And so, okay, so I mentioned, keeping things light until next week, and also diversified. Market neutral, what does that mean? To some, simply means if you're long SPY, you have puts on the SPY, market neutral to me is, it's be short the most bullish stocks or sectors, short, long the most bullish, short the most bearish. Plus, I mentioned how T-bonds right now I'm viewing as an indirect hedge to any index shorts, and that in itself you can net out. Take if you have whatever your number is, whether it's 10,000, 100,000, a million, or less, whatever, of let's say 10,000 short SPY or QQQ, then you'd want to be at least 20,000 long treasuries because of the lower beta there. Okay, so here it is. Catching up to what I wanted to get at, and then I'll wrap the video up with the ag input stocks. I definitely want to cover those. Great video. How about the China trade you put on? Here's my reply. PGJ that's the China ETF that I threw out there, is still above and currently back testing the primary downtrend line after reversing a hair shy off T1. So as long as it doesn't fall much below that, here, let me just give you the live chart, or here's the chart I posted. You can, of course, go in the comment section, look at that. So we threw it out here. Remember, I missed the initial pop, threw it out on the pullback. and stated you could buy it down to this trend line support and 2580 support there. I forget where, if I don't even know if I threw out a suggested stop, but let me just show you where we're at now. Let me go to the live chart. All right, PGJ, I'm sorry. PGJ. All right, so this is it. You've got this downtrend line off the highs right here. There was initial pop on the China stimulus. Remember, we're coming off a divergent low, and so this is it. So basically, a breakout. That wasn't. I didn't have it here. We caught on the went long on the pullback, and we've had several tests. We've been riding this trend line here. We reversed a hair shy of T1. And as long as this trend line or this price support below holds very close, that's what you want to see ideally. There's an uptrend line that may come into place here if you want to buy China. If it pulls back a little deeper, there's that uptrend line. Let me add it to my chart now. So that's what China looks like. And again, it's not really doing much. China will probably come in with some more stimulus soon. I won't even comment because I'm not an expert on geopolitical relations, what the Trump win's going to mean. I don't know if the market knows either. And then what I also mentioned in there is PPO is poised to it. Now, it hasn't done so. It hasn't crossed yet, but if it makes a bullish crossover soon, especially above this zero line, that's going to be bearish. The zero line on the PPO, what I just highlighted here, that dotted line, delineates bullish and bearish trends, meaning when your PPO is above it, the trend is bullish. Then you can see a bearish rising wedge. It was a sell signal and then confirmed with a crossover down below. The PPO was below the zero line this whole downtrend here, crossed back up. So see, it's very, very simple and effective. It helps to confirm or delineate the bull and bear trends, bull trend, even a little bear trend when you dip below there, bearish trend, right, go down. And so this was it. We made a bullish crossover here following that divergent low, and this was the first leg up, pulling back. We're coming back to price support, back testing, plus the PPO. Now, if the PPO crosses, and if we break this support and that support, that's bearish, and you could probably short it. Certainly want to get out of your long at that point. So there's your update on PGJ. Now let's take it home and cover the ag input sector. I think it's 2010. Nope, that's oil and gas drilling. Let me IPI. It's one that I pull up. 1010. Okay, IX 1010 on TC 2000 is the ag input sector. As I said before, I don't believe there's an ETF that tracks exclusively this sector. Maybe there is. If you know, you can post it on there. So we had a big divergent low here. So far, that was a low. We've been zigzagging higher, but mostly basing. This is what I see. This line right here has been capping all the advances since we fell back below it, including most recently. So we need to break that out and open the door for a much bigger run. Now, the sector itself has broken out below the downtrend line here. So there is a breakout in play right there. And it's coming off a divergent low, which is really off this bigger divergent low. So far, that was the low. This was just a higher low so far. So again, need to break this, but let me do this. And I've covered these recently a couple times in videos. I might even have given you some static charts, but what I'm going to show you here is we're going to start with this one. Okay, so what I've done here, DBA is in white, the white line right here, the line chart, and the sector, ag input sector, which are your fertilizer companies and such related type companies. You have in the candlesticks. And you can see a very, very clear correlation between the two. There's drops there. They went down. They both went down. And then the big drop there. They both bottomed, and they've had a very strong positive correlation. I'll just scroll forward since the bottom in 2020 after COVID. And you can see here the sector peaked. So did DBA. DBA, oh, I should have mentioned. All right, DBA, as I've covered, it's also been a long-term trade idea for a while, is the agricultural commodity ETN or ETF. And that holds, as the name implies, all the ag commodities are in there. You've got live cattle, lean hogs, sugar, cocoa, wheat, corn, soybeans. So as I said, it's a one-size-fits-all. If you don't want to do the individual ones that I highlight, And so my point is that typically, as those agricultural commodity prices are rising, so are the ag. Well, why does it make sense? That's a very related sector. But something happened here recently. You see somewhat of a divergence, but just recently, you can see the drop here. But let me show you DBA. Let me turn off the correlate. But you can see the tight correlations is what I wanted to show you. And drawings. Nope. I go to chart properties, edit chart properties, turn off the comparison right there. Okay, so let's get to the, let's do DBA, and then I'll roll into the individual stocks that I've been highlighting, and then we'll wrap it up here. There's DBA. Again, this is when COVID hit. This is when the commodities bottomed, and there was that big run up, and everybody and Kamala Harris was we're gonna get the grocery stores on price gouging. No, it was just I'm not going to sit there and blame it on the administration. I think it was the Fed's probably more at fault than it was a combination of Washington and both DC with fiscal stimulus and then the Fed with monetary stimulus. But we had this runaway inflation, commodity prices. What's General Mills going to do when the cost of oats and wheat and all that go up? Are they going to, they can't, they're going to raise the price of cereal and so whatever. And they were vilified, but it was a real thing. And this trend continues today. And so, I've been longer term bullish and remain longer term bullish on commodities, including agricultural commodities. In one case there's more and more mouths to feed on this earth every day, and less arable land in which to grow it as we continue to build everywhere and develop. So whatever, that's kind of a long-term thesis. Either way, the charts, I don't care what the fundamental case is. You have to have constructive charts. And we did come off a divergent high recently, but either way, know that this is the current trend. And now we're going to go back to the ag input stocks. And I'm going to go through each of those individually. And we're going to do it on a weekly chart. I've already covered them on in recent videos. I've covered on the daily chart. I've given you breakout levels that we need to break above and price targets. So I'm going to start here with CTVA. Remember, this is one I've had concerns about on the daily chart because of the negative divergence, and after earnings that did play out. Remember, I was highlighting it's the one that had negative divergence, and it did get knocked down. I think it was after reporting, but look, it's come up to that uptrend line, so it's actually a buy and the breakout point. So the divergence has played out. It could certainly play out for more, but it's at support right now. So I want to highlight that as an objective long with a stop somewhat below right here on intersecting price and uptrend line support. Okay, not my favorite again because that's a pretty big divergent high. I'm not sure what their exact makeup of products are in the sector, but you can look it up. But I'm going to go over the rest of them. Again, we're going to stick to the weekly chart. You can reference any of these stocks. If you go to the post, down below this post on this video, I will tag all the symbols covered in this video. And if you click on any one of those symbol tags, it will bring you back, will load at the bottom of the page, all the posts in chronological order, or technically reverse chronological order, starting with the most recent, of that there was coverage on. So I usually cover these guys together. But this is a very clear and simple view. All right, weekly chart. This is a downtrend line off the highs of early 2022 when they peaked. And this is our divergence line. I don't even have these fully marked up, but that's what that is. The upper line is your downtrend line. And you can see, nice, we're right there. And look at the 200-day moving averages. On my weekly chart, they're 40-week moving averages. It's the same thing as a 200-day if you go to a daily chart. And you can see in a bull trend, you were above the 200s. In a bear trend, you're below them, and you typically get rejected on rallies into. So when you break them, sometimes you get a failed breakout. But again, that time, now you have a downtrend line coming in and the 200s right together. So a little more upside, and this thing breaks out. Where to? Again, I've given you targets on the daily chart. But if you take a bullish falling wedge, measure the widest part of the wedge, which I've done here, add that to where the wedge breaks out. That's a rule of thumb to give you a measured target. And so if hit, and again, assuming it breaks out soon, that's about almost a 50% rally. All right, next one up, CF. CF right here, you can see put in a big divergent high there. I don't have the weekly fully marked up. And had a clean uptrend line, which triggers sell signal. We had a corrective period, nice correction, and let's see where that measured target, how that played out. If you take it, widest points about right there. Add that down, so it came in a little bit below the measured target. And what I see now, it's been bouncing on this level right here. It's about 88 and a quarter or so. And so a solid breakout, especially a weekly close. If we start moving away from that, that's going to be bullish and most likely send the stock up on the next leg up. All right, next one up is Mosaic, MOS. Beautiful. This is why I'm doing this video, guys. When I see a lot of these, I always say birds of a feather flock together. Some sectors have a higher correlation among their components than others. GDX has a very high correlation. These guys are pretty tightly correlated as well. And then you can see big on the weekly chart. Now these weekly divergences, and it's got some decent, not the best, but decent support there. But it doesn't matter. Bottom line is look at the 200-day moving averages coming in here, 40-week period, boom, 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 boom. So this is one of my favorite kind of breakouts. If we can punch through there on a solid weekly close, especially if the other components break out as well, the majority of them, then you in one fell swoop, you took out downtrend line resistance, which some traders see, and then you took out the 200-day / 40-week moving averages, which other traders see. So then you've got two subset of traders buying the stock at the same time. First target, second target on a weekly chart, that would give you an initial hit of about 13% profit and about 42 to that second target. And, if we get some traction, may add additional targets, but we need to break out. That's the takeaway here is these guys are really, a lot of them are testing key resistance right now. They look poised to break out, but haven't done so yet. FMC. Nice resistance here at about 68.45. That's coming off this divergent low. Punches through there. On the weekly, I don't have anything stopping it until it gets up to about 86.62. Again, there'll probably be some micro or shorter term targets on the daily. That'd be about a 26% pop if hit. ICL group. Again, beautiful downtrend line on the weekly chart coming off those early 2022 highs. There's a great example of trading on the weekly time frame. It broke out intra-week, but right now it's not going to close the week above there. So it's not really a false breakout or a failed breakout because we haven't printed a weekly close above there yet. On the daily chart, it would have given you a whipsaw. But look where it hit too. It rallied right into these intersecting 200-day moving averages, just like it did here, here. About 4 weeks of rejection there. Hair shy right there. Again, so if we can pop those 200-day moving averages just above, first stop 547 from where it's trading right now, that's going to be a run of about 33% to get there, then 671. And that's a pretty good, let's say, near-term target. Total gain, if hit, of about 62%. SMG, Scott's Miracle Grow, little downtrend line. You can buy pullbacks too, which it just looks like it just hit. Yeah, I had that on the daily too. And again, this one put in divergent high right there. So you got to watch those divergent highs. Even in a bull trend, they're going to give you usually corrections, but then corrections back to in a bull trend. That's what you do. You buy pullbacks to support. Just like Tesla was a rally into resistance. You short rallies into resistance if you have especially negative divergence. And in this case, you don't have positive divergence, but you have a pullback to dual support. What I mean by that? Uptrend line plus, you got it, the 200-day moving averages right there. Look at that. We're right on the 200x. We're right splitting the crosshairs between the red line, which is a 200 exponential, and the blue line, which is a 200 simple. You hit them both right here. You hit the simple right here. They were buying the exponential here. You were below them here, and this is when you've made a solid. Once it was clear they recovered, you rallied. And this has been in a bullish trend since then. So again, TA 101 or trading 101. In a bull uptrend, you buy pullbacks to support. And in this case, you have not one well-defined support level of the trend line. You have two, the 200 days. So on a scale 1 to 10, That's a 10. Now, it's a big red candle. They didn't like what they were selling on earnings. It doesn't matter. You take it mechanically. You buy it. It either works out or it doesn't. Your stop will be somewhat on the other side. Somewhat is up to you. Are you looking just short term for a bounce off there, or are you looking a longer term trade? If so, you can put a stop a little bit below that 65-ish support. However, it won't be good to see the 200s get taken out clearly on that uptrend line. So that's SMG. UAN, let's go back to the weekly again. There it is. You had this first downtrend line taken out there. You had decent, this is support now, especially here. Now you have this secondary downtrend line and the 200-day moving averages. Again, it's a common theme here. See them both right here? And that's where we got rejected right there. This one did take them out, started to run, but guess what happened? The rest of the sector didn't go. So this one's ready to party. Come on, guys, let's go. UAN broke out the trend line, powerful breakout, tested the 200s, wanted to run, but the sector dragged down, just like the gold mining stocks. You know, and one breaks out and the rest don't. It's only going to go so far without confirmation by the rest of the group. Same with the Mag 7 stocks. That's why I watch them all collectively. All right, so that's it. We need to take out those intersecting downtrend line and 200-day moving averages. LVRO popping it this week. Yeah, let's see. But when I jump down to the daily, and this is why I trade multiple time frames, got pretty nice support right here, which it ran into. So it broke out of the downtrend line. It's back testing, but it's got a clear 480. That's the BOD, or benefit of the doubt, support level. BIOX, that's, we're getting down. Remember when I did this video, I told you as I go on, we're going down from you know, the big cap companies down to little small and even micro caps. You have a lot higher risk here with these little guys. I don't have it annotated on the weekly BIOX. I just have, or at least not any key levels. That wedge is a little steep, but you've got divergence, and it's these little. If the sector gets traction first, when the big boys, the leaders break out. Eventually, if the you know, you usually get the momentum traders that'll come in and start then going after the lower tier, lower quality ones. You get short squeezes going on and momentum traders coming in there. IPI, we're back to a weekly time frame. Just beautiful little ascending triangle pattern. There's just great resistance right here at about 28.20. Right there, there's an uptrend line, gives us a ascending triangle pattern there, and you have this one already taking out. See the 200 days, it lost them right here. It was a bull trend here. Buy the 200, buy the 200s, buy the 200s, buy the 200s. 200s broke. What do? Sell the 200s, 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 buy the breakout. It's a big green, you can't miss it. That was a solid break above the 200s. And what do? Buy them, buy them, buy them. That was the exponential. Drop that, but guess what? Some folks look at the simple. Some look at the exponential. That's why I look at them both. Buy it, buy it, buy it, buy it, buy it. So far, it's above its 200 days. It's got an uptrend line here. They've been buying it also. So these are all your levels, both objective pullbacks to go long or stops below. And then obviously we're already above the 200s. Now we need to break the this level here about 28.18. Again, you need to break it on a weekly closing basis. Today's Friday. So what happened this week? Well, tried to break it, but we're going to close the week right back on there. So these are really just great setups right now. I told you I started nibbling on them weeks back, and they're most of those, I believe, they're all profitable, but they're really, they're not full all-in positions until we take out those weekly trend lines, especially on the majority of them. AVD, I don't have much marked up here. Big divergent low, again, well below the 200s, but again, you can visit the other posts, look at the weekly charts. I don't have anything on the weekly here. I mean the daily charts. This is the weekly. CGA, downtrend line, downtrend line, downtrend line, downtrend line. Needs to break that downtrend line. 200-day moving averages, rejected. Broke them there, couldn't hold them. It's kind of been flirting around. Again, it needs, a lot of these guys need the sector to cooperate, or the breakouts are going to continue to fail. That's it. So there's your levels. Getting down to the lower tier stuff here. Really be careful with these low. That one's not trading anymore. I don't really have marked up on the weekly on NITO. That's the sector itself, which I started out covering. Again, you can kind of see it here. Needs to pop that level. And then the last one, that one's not trading anymore. Okay, that's it, guys. trying to remember if there's anything else that stands out. If there is something again you want to see that I haven't covered or something I have covered in recent weeks or months, there's been a lot. I've just got to. I'm trying my best to clean up the trade ideas, like I told you today. Kind of archive, move some out that have either hit targets or stopped out. I'll continue to do that over the weekend. And that's it. Let's get this one out to you. Keep an eye on these ag input stocks. The easy thing to do is set price alerts. And that way they drop off your radar, because that does happen to me. And every now and then I forget to set alerts on a sector or stock I'm watching. And by the time I loop back to it, I realize it had a perfect breakout that I missed. So I set these alerts. I've been keeping a close eye on this sector. I don't think it's going to run away from me, but just wanted to show you the correlation again of the agricultural commodities itself, DBA, and the relationship there to these guys. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.